What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. I have a very good video for you today on the SoFi stock. We're going to be talking about why SoFi stock has so much upside potential right now, today, and how the media is so corrupt and why they've actually been lying to you about inflation and how it is affecting the stock market right before your eyes. And only if you feel this video gives you a better insight on the SoFi stock and the direction that the company is headed, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's gonna be a lot of great information coming out and you don't want to miss it. Let's get into the video. All right, guys, we got some good news on the SoFi stock and we got a little bit of bad news, okay? The good news is that we made it out of that high 14 range, that 14, 60, 70, 80. So the stock did bounce out of that the last couple of days, surged all the way up to like 16 and a half, and now we're hovering right around, 15 and a half. So the good news is we made it out of the 14s, the high 14s for now, and we're kind of just bouncing in this 15 range. The bad news is we finished down 2% today, down 0.3% after hours. So it still looks like the big money is really trying to shake out, these retail investors before these earnings reports come out. And guys, I believe the difference between, the last earnings reports that came out where pretty much companies had amazing earnings and then get any credit for their performances, I believe that was because of the crazy inflation headlines. And now that we've really absorbed the inflation headlines since, February for pretty much 5+ months, I feel like now we can really focus on companies' performances. And I believe, those headlines that they were putting into our heads, the retail traders about growth is going to have a rough year, stick to value, stick to cyclicals. I believe that's a bunch of nonsense, and I'm going to show you why. And guys, also, the market cap is still sitting at 12.5 billion on projected revenue of 1 billion this year, guys. So we're only trading about 12 times sales on a company with growth projections in the 50 to 60% range for this year. That is, when you're talking about growth stocks, that's literally like the top 5% of, companies of this size. Anything growing above 50%, like a CrowdStrike, like a DocuSign, Twilio, 50% growth is absolutely insane. And the difference between those companies I just mentioned and this company, SoFi, is the valuation. Those are all trading at 40, 50, 60x times sales. We're still trading at 12x sales. So I really believe, the big money is shaking out retail investors on this one, and they're going to definitely go long on this company, just like all of the other growth stock stories of the past 5 years. This is just the high volatility we're seeing in the short term, and this is how you're going to be a successful investor or not. You got to hold through this crazy volatility. As you can see, this stuff lasts for months. We sold off for almost a month and a half, 40% sell off, really shaking out people that bought in higher. It does not matter if you bought in higher. What you should be doing if you believe in the company is averaging down, dollar cost averaging every 1 to 2 weeks. Just buy a little bit more. That's what I've been doing. I usually buy right around every 10 days. I'll buy a little bit more if the stock is still sitting lower. And that's just the game plan. Buy every 1 to 2 weeks. So guys, on the Fintel, .io, this is the website you can get like short interest, institutional investors that are buying and selling, and just see what the big money is really doing inside of the stock daily. And as we can see right here, we have 173 total institutional holders, and 150 are going long right now. So if we scroll down, it's going to give us some positions that these institutional investors have. We can see right here, Exos Asset has an $18 share cost average, 15,000 shares. 1877, 15,000 shares for Valio. $18 cost average for GWM, 33,000 shares. And we can see a couple here are selling out. As we can see, they've sold out of their positions. We have a put right here. We got a call. We got a put. So this really tells me that nobody knows, what's going to happen with the SoFi stock in the short term. People are guessing on calls, guessing on puts, selling out, averaging up. So nobody really knows what's happening in the short term, with these pipe investors. So the best thing that you can do really is build a position as the stock gradually goes down. We got $18 cost average, a $17 cost average, $18 cost average. So you can see a lot of these institutional investors were buying in the $17 to $18 range, guys. If we go back a couple of months, we have some $15 positions, which is very solid. That was probably the first sell-off that happened, a month or 2 months ago. So this is just going to give you a lot of updates on, position sizes of these institutional investors. It looks like all of them are in between, 14 and 80, and these are some of the bigger sellouts earlier. So some positions are going long, some sold out, some have a $18 cost average, some have a $15 cost average. So guys, this is just to give you more confidence inside of the stock, okay? Everyone's positions, are pretty much in the same ballpark. It's not about timing the market on the short term. It's about time in the market long term. That's how you're going to win on this company. You need to give this company 3 to 5 years minimum. Of course, this year in the next 12 months, we could see possibly a triple on this stock. That's going to be the best case scenario. $45 stock price by Super Bowl. That is going to be a legit triple. That's the best, upside potential in this stock, okay? Anyone thinking 10x short term, 5x short term, it's not going to happen, okay? Maximum price I believe this stock could see is, maybe 45 and a half, by Super Bowl. So that's 2 earnings reports. That is, bank charter approval. That's a lot of upside potential in the stock price. So right now, a lot of people are getting hammered, but I'm going to show you why I believe the media has been lying to retail traders on the, headlines of this inflation. Growth stocks are going to get hammered. Go the cyclical route, go the value trade route, go the reopening route. I believe that is a bunch of nonsense, and I'm going to show you exactly why. Snapchat just reported earnings yesterday, guys. 24% gain. No after hour sell off at all. Look at this, 0.017. 24% gain in a growth stock. Guys, this company is 10 times larger than SoFi. This is 122 billion market cap right now. That means the company just added like 25 billion in market cap in one day, guys, off of, earnings. So this tells me that big money is buying growth. And when I say buying growth, I mean buying growth heavy. This is not just retail traders, guys. This is institutional investors buying up this stock like crazy. Yeah. You can see right here, Snapchat's institutional ownership, according to the NASDAQ, is 62%, guys. Big money owns this stock right now, guys. 62% of institutional investors own this stock. That means they were buying it up heavy on that earnings report. Now, if we look at the earnings report on, Snapchat, and we'll just take a look at their performance the last 3 quarters. They had 17% growth, back in June, 52% growth back in September, 62% year over year for December 2020. And guys, this is the earnings reports that nobody really got credit for because of that inflation headline. So what that tells me is a lot of these companies performed very well the last earnings report, so their stocks sold off. So this gives you even more upside heading into these earnings reports. As we're seeing right here, almost a 25% gain in Snapchat. Guys, that is crazy. That is $25 billion in money being put into this stock. As you can see, pretty much the exact same revenue growth from the last quarter, 62% and 66%. So revenue was pretty much exactly on the same track as the last quarter, except this quarter, the company got validation for its performance because I feel like the inflation headline was just blown up. As you can see, inflation does not really affect these companies. It may affect, interest rates on the companies being able to acquire loans and stuff like that, maybe slow down their growth a little. But as you can see right here, the company just literally grew by 1/4 in 24 hours. This is just the media playing with people's heads, guys. You got to buy these growth stocks that are undervalued. Snapchat right now, it had really good potential upside of about 30%, I believe, before that earnings report came out. And now you can see because of the stock, ramping up 24%, the upside on the stock is only 10%. So it still actually has upside. So this is one of those growth stocks that was significantly undervalued. but I believe they put higher price targets into the stock after the earnings reports. That's what I've been telling people, that can happen the exact same way with the SoFi stock with their earnings reports, guidance, that could raise the stock even more. We have right here the guidance for, 2021, the overall guidance for the year is still going to be at a 58% annual growth rate. Contribution margin, 27%, and adjusted EBITDA is expected to go, in the green this year at 27 million, giving them an adjusted EBITDA margin of 3% for the first time since inception. And right here we have the Q2 2021 guidance, which is literally exactly in line with Snapchat almost. A Q2 2021 higher end, 61% growth. Q2 lower end, 58% growth. So this company literally is having 60% growth, exactly like Snapchat. But the massive difference we have on SoFi stock is where it's trading right now at 12 billion market cap compared to, Snapchat at 120 billion market cap, okay? Snapchat is projected to do right around 3 billion in revenue. Yes, SoFi is projected to do right around, 1 billion in revenue, but the thing about Snapchat is this is trading at, I believe, nearly 40 times sales now that the company has gapped up to 122 billion market cap. So Snapchat is now trading at 40 times sales with the exact same growth as SoFi stock, quarter over quarter. And SoFi is trading at 12x sales. So guys, this gives us, a valuation potentially, if we get to Snapchat's valuation, right around a $45 stock. So this is great news for SoFi, with what we're seeing in other growth stocks like Snapchat surging after earnings. And once again, be ready for the tip ranks update, after earnings to be up to maybe 5 or 6, Wall Street analysts. I believe they're being very, very, sneaky on this stock, not trying to give it any coverage before a blowout earnings back to back. 75% upside right now on the stock, guys. That is ridiculous. Snapchat right now is sitting at about 10% upside. We have 75% upside. So this is your cushion if you have not bought into the stock yet. You can see the management has gave us guidance, the exact same guidance pretty much as Snapchat stock. Guys, you see it right here after, earnings performances on Snapchat. No one gives a crap about inflation. As we can see, growth stocks are surging faster than they have ever surged. I mean, 25% movement in 24 hours. That is absolutely insane, guys. This can happen to SoFi stock very easily after that earnings report comes out, I believe in like 2-3 weeks. So we could get shaken out even more, these next 3 weeks. That's what they're doing from what I'm seeing, on this stock. They just keep bouncing us around 14 and 15 right now, 16. All of these are buying opportunities in the $15, $16, $17 range. Remember that because of the upside, Wall Street price targets. But I'm showing you guys right now, the stock market is very, very manipulated. A lot of retail investors are selling out on these nasty red days, when you see stocks drop 10%. Big money comes in there and cleans up the shares, adds to their, long position. The institutional investors grow even more. And I believe, we're going to see a very, very big movement in the SoFi stock heading into these earnings and after earnings. So right now we're undervalued compared to, Snapchat. Snapchat is trading at a 42x multiple, guys. 42x multiple. SoFi is trading at a 12x multiple. So there's your valuation right now on a stock that has the exact same growth. Exact same growth, 60% right now. So there's your upside potential, guys. Once again, if you want to get more in-depth analysis on the SoFi stock, I recommend to scroll down on my YouTube page and check out the SoFi videos I was doing like a month ago, because those are the ones I really, really go into the stock and give people a good update. So right here, these videos about 3 weeks ago, I do more in-depth analysis on the SoFi stock. So this right now is for people that have been, watching and covering the stock for the past, couple of months. So this is just to give us updates on what I'm seeing as far as, what's going to happen in earnings report. So if you want the more DD due diligence, go check out the other SoFi stocks that are further down on the YouTube page. And once again, guys, if you feel this video in any way gave you any better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out and you don't want to miss it. I hope you have a great day.